Fulfilling the required legal obligations as a small business owner can sometimes feel like a minefield. A busy schedule does not often allow the luxury of stopping to ensure all necessary forms and submissions are up to date. Whether you choose to follow a manual or electronic process, it's important to set aside a day in the first week of the month to complete what is required by law. This module will cover a summary of registrations that are required of an employer, a basic overview of monthly SARS requirements. As a new business, you're required to comply with certain regulations. You're required by law to register as an employer with SARS and the Department of Labor within 14 days of employing someone. Register to pay income tax as soon as you start your business. And register for VAT when your turnover reaches a certain threshold. In addition to these registrations, you need to display a copy of the relevant acts at your premises for your staff to see. It's also advisable to apply for a tax certificate from SARS once a year in case you want to respond to government tenders. Let's look at the requirements by SARS when you become an employer. As a business, you're legally obliged to register for the following within 14 days of you becoming an employer. Pay as you earn, otherwise known as PAYE. Skills Development Levy, or SDL, and Unemployment Insurance, or UIF. You can register for these in the following ways: e-filing via the SARS website using the EMP 101 form, or manually by completing an IT Reg form. For a manual registration, a request for the IT Reg form must be made to SARS. The forms will then be posted to you. Requests can be made by phoning 0800 00 SARS or 0800 00 7277, visiting a SARS branch, or you could send a fax or email to request the form. Look up the correct fax number or email address for your region on the SARS website, www.sars.gov.za. Should there be any changes in your registered particulars, or if you no longer operate as an employer, you're also required to notify SARS within 14 days. All employees are now required by law to be registered with SARS even if they're not liable for normal taxation. As an employer, you're required by law to have all your employees' tax numbers on record. If one of your employees does not have a tax number, they need to apply for one by registering with SARS. SARS has tried to streamline this process for employers by adding a new function to their Easy File Employer website. This function will enable you to verify existing income tax reference numbers, obtain existing numbers for staff members who don't know theirs, and register employees for income tax. The next registration we'll look at is the Skills Development Levy, which is better known as SDL. The Skills Development Levy Act established a compulsory levy scheme to fund education and training in South Africa. This came into operation in the year 2000. This levy is payable by employers on a monthly basis. You can register for SDL by means of an EMP 101 form. We mentioned earlier that registration for PAYE is also done via this form. The last registration that relates to your staff is for UIF. The easiest way to register for UIF is by going to the Department of Labor's website. There, you'll find an Activate My U-Filing Account button. All employers who employ a person for 24 hours or more per month must register with the fund as soon as they become an employer. It's your responsibility as an employer to register the business with the UIF and make the regular monthly payments. The SARS website can be accessed to find all the relevant forms and samples of employment documents, as well as the instructions for each of these. It's a good idea to visit this site on a regular basis to keep up to date with any changes to the various acts and to determine how these would influence you and your business. The next registration to discuss is VAT. VAT is an indirect tax based on the consumption of goods and services in the economy. The government generates income by requiring certain traders or vendors to register and charge VAT on taxable goods and services. Your business is only required by law to register for VAT if its turnover exceeds a certain threshold, although you can apply to do so before your turnover reaches that amount. This threshold changes from time to time, and so it's a good idea to refer to the SARS website to remain up to date. Registration for VAT can either be done online or manually by means of a VAT 201 form. If you want to complete the form manually, you'll need to request these forms from your nearest SARS office. Completed forms can be either posted or handed in to SARS. We've included a simple step-by-step guide on how to register for VAT online in the download section of SMEasy. We'll now take a brief look at the topic of income tax. All businesses have to register for income tax. It's best to get advice from your accountant or even directly from SARS on tax issues, as this can be a difficult subject to understand. In order to create an environment that supports small business growth, SARS has implemented an alternative simplified tax system called turnover tax. This was introduced in March 2009. There are certain rules that determine whether you qualify to use the turnover tax system instead of the normal income taxes. Consult the SARS website to see what these rules are. If you qualify, you can register for turnover tax by completing a TT01 form and submitting this to your nearest SARS office. If you're going to be submitting tenders for municipal or government contracts, you'll be required to have a tax clearance certificate. This certificate shows that all your affairs with SARS are up to date. You'll be required to complete a TCC 001 form, which needs to be submitted to your local SARS office. You can also apply online on the SARS website. Finally, all businesses in South Africa are required to display copies of the acts that are relevant to staff members and clients at their premises. The reason for this is to ensure transparency and accountability. The acts that are required by law to be displayed are the Summary of Employment Equity Act, the Basic Conditions of Employment Act, the Skills Development Act, and the Occupational Health and Safety Act. Now that we've dealt with the various regulations, let's take a look at some of the monthly procedures. South African law requires businesses to deduct certain amounts from its staff members as well as pay other amounts over to SARS. This is all done using an EMP 201 form. The first deduction from its staff members is PAYE, or Pay As You Earn tax. The Income Tax Act states that employers are required to deduct the correct amount of tax from employees and then pay this amount to SARS on a monthly basis. Monthly returns are made by means of an EMP 201 form and can be completed on e-filing or submitted manually at a SARS office. This form reflects the total amount of PAYE deductions for any particular month for all your employees. It's your business's responsibility to make sure that you deduct the correct amount of tax every month from your staff members. You can use the SARS PAYE tax tables to work out the exact amount of tax to deduct. You'll find the tax tables on the SARS website in a format for you to easily download onto your computer. Here's a very small portion of the tax tables that we downloaded from the SARS website to show you how easy it is to use. If your staff member is earning 5,360 Rand per month, for example, then the tax that you'll need to deduct is 110 Rand every month. You'll notice that there are different rates of tax for people who are 65 and older. Every year, SARS uploads the latest tax tables onto its website. The second deduction from staff is for UIF, or the Unemployment Insurance Fund. Every month, you're required to deduct UIF from each staff member's salary and pay it over to the Unemployment Insurance Fund via SARS. This fund is used to support people who become unemployed under certain circumstances, for example, retrenchment or disability. Both the staff member and the business are required to make a contribution to the fund. The staff member is required to contribute 1% of their salary, and the employer will match the contribution with another 1%. As with PAYE, this is captured on the EMP 201 form. Skills Development Levy, or SDL as it's better known, is a contribution made by the company. All businesses that employ staff members are required to pay SARS an amount which is equal to 1% of the total salary paid to the employee on a monthly basis. You fill this out on the EMP 201 form together with the deductions and contributions we've just mentioned. Annual returns also need to be completed for SARS. This is done via an EMP 501 form. This form is a way to balance your deductions for PAYE, UIF, and SDL and correct any errors you may have made during the year. Once you've done this, you can then issue your employees with their IRP5 or IT3A certificate. They have to take these to SARS in order to ensure their personal tax is up to date. If an employee earns below the minimum tax threshold, an IT3A will be issued in place of an IRP5. The difference between these two forms is that the IT3A reflects the total amount earned but does not show any tax deducted, as this is not applicable. An IRP5 is basically a certificate which states exactly how much PAYE has been deducted for a particular employee for the tax year. It can be generated by the SARS EasyFile software at no cost to the business. Remember, a tax year is from the 1st of March to the end of February the following year. If you're registered for VAT, you're required to submit a VAT return every second month on a VAT 201 form. When you register for VAT, you'll need to choose between two periods, Period A or Period B. Period A means that you'll submit your VAT returns in January, March, May, July, September, and November. Period B means that you'll submit your VAT returns in February, April, June, August, October, and December. VAT payments on e-filing are both time-saving and hassle-free. Submissions and payments can be made on the last day of the working month, unlike manual submissions and payments, which are to be made by the 25th of each month. The electronic method therefore means that you have cash available in your bank account for longer, which will help you with both cash flow and potential interest. In this module, we have covered some of the legal requirements for small businesses. Remember that each business is unique and that legal compliance can be complicated, So we recommend speaking to a professional if you need more specific advice.